Alright guys, what is up? This is the day recap for the 1st of November now, and I have been I have had a couple of rough weeks regarding trading. So yeah, it hasn't been too great. I will go over this week's price action, and yeah. So firstly, I'm gonna go for the first of November, and yeah, I'm gonna just talk through that. So we had a big range right here on the 1 hour right here. We swapped liquidity up here, swapped liquidity down there. That becomes the range. We came back into the 50% of that. We came back into the 50%, or we came back into a premium where I was looking for shorts, right? And yeah, this is when we came back into it. Today I had the wrong bias, but it turned out fine. In the future, I probably have a different bias, but either way, like the bias or the entry would have been relatively the same, right? If say because I was bearish today, right? Say if I was bullish, then an entry could have been after the 4 hour, or rather when the 10 a.m. closed. It inversed this 4 hour value gap, but I wasn't really interested in that, like as in longs at the time, so I didn't really look at that. I'll delete these because this is getting pretty distracting. It's really late, as you can see. It's like 1:18 a.m. So I did promise my friend that I would record the few weeks that I've had, the last couple of weeks. On the 4 hour, we tapped into this fair value gap there, which is really good. It's above equilibrium, so it's in a premium, and yeah, that was a very nice fair value gap to base my trade off of, right? On the 4 hour, we inversed this fair value gap. That could have given you a bullish bias. It didn't really convince me because it was we had this big range. I wanted to see it come down, and I wasn't expecting price to come higher than this, like swing high over here at the top of the range. I wasn't expecting just a big drop down and then a big push up, right? I was expecting some sort of at least a retracement, which is what happened. And yeah, so on the 15 minute we had a fair value gap right here. We tapped into it, and we went higher. Before that though, when we first came up into the premium, we also swept buy side liquidity right here, and we also tapped into a 15 minute fair value gap, and which is really good. I'm gonna delete that fib. And now this entry that I'm about to show you was probably the best like setup that I could have asked for. Like, it wasn't really any like second thought about it, right? We had SMT. You're just gonna have to take my word for it. I can't be bothered to go on the other thing, but that's not where I think I got out, like right here. So yeah, I probably like right here. We had an order block right there. We had a change in market structure. So change state of delivery or an order block, a shift in market structure, an inverse fair value gap, and that had a pretty so that gave me a pretty big incentive to short. I first shorted at this inverse, but the spread, or rather it came higher, and I got in at a much better position. And then I did another entry around that order block right here. So 1 micro when it inversed, and another micro when it taps into that order block. There could have been 3 entries that you could have taken here. There is another order block right here, and you could have taken it off of that, this candle right here, which gave us a like that much R. I think there was SMT over here. Let me check. So I'm pretty sure there was SMT over here. Yeah, SMT there, but yeah. So there was SMT right here on those 1 minute candles, and that was really good. And now you can see that was a SMT there. So your stop, if I had taken an entry up here, right, my stop could have been like come down to there, and like the total risk would have been like that much, say. But that didn't happen, so there isn't really a need to you know, like talk about that. So altogether this was the trade, and I will pull up Notion right here. So I have recently, well, today started what's the word I'm looking for, using Notion, right? And so far it's actually been pretty good. So that was the trade idea or trade execution. This is the trade execution where I did it on the micro NQ. So you can see 2 shorts here. It doesn't really tell you where the short was entered, but I assure you it's like it was around there. It was a really good entry. And then where I took profit at the 15-minute fair value gap right here. So the first TP was there, and the second TP, well, it wasn't even a TP, right? It was like, I guess it was there. So first TP there, and second TP, or rather, I closed the trade when it disrespected this order block here. So this candle displaced higher. Yeah, the candle displays higher, so then I exited that trade there. Because the reason why is because I knew that eventually it would come higher. It didn't, because of the weekly. Show you. We had swept the last week high. We swept last week low, and it was unlikely for us to make a new low of day or a new low of week on a Friday as well. So yeah, I understood that. So then I exited there. If you were bullish, you could have taken an entry right after here. So right after my entry there, you could have taken a buy here at this order block here, and that would have got you a pretty good RR. You could have entered here. So enter there. We had SMT, so the SMT should be where your stop is. So right here, and yeah, that's your trade for longs, right? And that would have been a really nice 1 to 3. So yeah, we also had standard deviation. This is something that I'm gonna have to learn to use more, but the short that I took here actually had a really nice alignment with standard deviation, and if you look at that, that's really good. So yeah, that was the 1st of November. The day before that, I didn't take a trade. We literally dumped on that day. There wasn't really a trade for us to take. I was bearish though, which is really good. So 30th or 31st? Okay, it's 31st. So right here, we had a big dump. We again made a high, then another low. So then we came into equilibrium there, but then we immediately dumped at the open. So I didn't take a trade. So yeah, a lot of people, I don't think took a trade either. 9:30, literally just dumped during New York Open. The day before that, I had lost 250, I think. Yeah, like 1%. Wednesday, right here, I think. Yeah. So let me make this full screen. Just mark out this fair value gap. Alright, so I know where price is. Alright, so now I was bullish. I don't remember. Crap. Well, I shouldn't have. Yeah, I was bullish. So on Tuesday, we had made a low. We tapped into a daily fair value gap as well. So from there, I expected a weekly expansion profile, right? Because we had a daily tap in or 4 hour plus tap in to a PD array, and that had given me a bullish bias, right? For Wednesdays, but the problem there was that we had already swept the weekly draw on liquidity, right? So this last week's high was the weekly draw on liquidity, or this week's draw on liquidity, and since we already had swept that, we wouldn't expect Wednesday to actually go higher than that, right? So that was like a false confluence in a way. So yeah, on the 4 hour, we had respected this 4 hour fair value gap. So then that gave me a more bullish bias as well. We had also tapped into this 1 hour, which we rejected off quite nicely, and I had waited for that 10 a.m. close. So a lot of the trades that I take, I usually wait for the 10 a.m. close. So So yeah, we had a retracement to a premium level, right? And from there you could have taken a short, but I was bullish. Sorry about that. I was bullish, so I was looking for longs, right? And because of that, I was blinded by just ranges that I could have used for an entry long, and yeah. And now, to be fair, it was a good day for me to lose. Like, not really. No day is a good day to lose, right? But it was a good learning lesson, rather. So from this 1 minute, like liquidity imbalance, and then to this high, we came back into the equilibrium of that, and I was like, oh, that's fine, right? And that should not have been the case, because usually, now what I've seen is that the ranges are more reliable when it's like a 15-minute plus time frame, and that's evident with this sort of range, right? And yeah, so I thought we were in a nice discount, so then I was looking for longs, and ultimately we got an entry here. We had an inverse Fairvalue gap, we displaced above a high, but we did not sweep. Did we? Oh, we did sweep. So yeah, that was a valid market structure shift, but the problem is that we never actually came to a discount, right? And yeah, that was the downfall. And I took a long, or an entry here, which first of all probably shouldn't have taken, for the reason that like hindsight, it shouldn't have been taken because of it not being actually in a discount, but during the trade, because I didn't know it wasn't in a discount, I thought it was. I shouldn't have taken this trade because this stop is horrible, right? My TP would have been like up here. I would have had okay, that seems a bit much, but 4 micros for $250, and yeah. So sweep, inverse, Fairvalue gap, market structure shift, and we had buy side liquidity lying up there. Yeah, so that would have been a good trade if it was actually in a discount, and we actually reached the real discount over here, where we also got an entry set up. So we got an order block right here. We had an order block, and we could have entered off of that. Yeah, you could have entered off this order block here. Probably see if there was SMT as well. 30th of October. So here. Wow, we dumped so much. Up here. Yeah. So we did have SMT, I think. Not really on a lower time frame. Oh, yeah, okay. So our SMT was right here. So you could have entered off of this close, and your stop could have been at the SMT. Yeah, stop could have been at the SMT. On the 5 minute, you could have looked for areas of liquidity. So all the way up there, your first TP being at this fair value gap here. Is that fair value gap? No. Your first TP probably at the highs or something. Look at the 5 minute again. Okay, not really much to get off of here, but probably on the 3 minute maybe. Yeah, so we've got a fair value gap here. That's your first TP. Break even could have been at this high. So yeah, that was a fair trade if you would have taken that. But of course I didn't. So yeah, on Tuesday I had a minor win and a minor loss, ending on the day with a loss. Let's take a look here. I was bullish. I think I was chasing price. Yeah, down here. So I entered off of this order block here, I think. Was it? Does not look like it. Tuesday. Down here. Yeah. So yeah, I was bullish. We had a push downwards. I think we respected some fair value, higher time frame fair value gaps. Let's just take a look. We did. So right there we closed higher, which was a pretty big sign that we were going higher. Yeah, that we were going higher. So or is it Tuesday, Monday. Down here. No? Down here. Okay. So I'm gonna mark out 10 AM close. Alright, 10 AM closed right here. And now we've got a sweep of liquidity right here. And that made our order block. I was pretty confident that we were being bullish, so we were taking out these draws on liquidity, right? And now the problem was the reason why I got stopped out here. I'll show you. So my entry was there, and TP being these highs, let's say those highs for now, right? Now I would have never gotten stopped at break even here. So on micro NQ, on the 1 minute, right here somewhere, 9:30, right here. It actually swept this high, but on the actual NQ, it didn't, right? And now the thing is, you want to be listening to the actual futures market, because that's the one that leads, right? Not the index one. So I should have never gone break even there, but I didn't see on the Nasdaq that we never actually hit this high. So it would have been fine to just keep holding through this drawdown, but yeah, I should never gotten stopped at break even there, and when it hit my actual break even point, it never came back down to break even, so which is really good. And we had another order block here, which we respected. That could have been a re-entry, but I didn't take it because I was like, it just felt like I was chasing or revenge trading, right? So I just didn't want to go through that process of revenge trading, stuff like that. So that was the weekly outlook for the 29th of October. Oh, the daily outlook for the 29th of October, and a weekly outlook as a whole. Yeah, TPs all the way up there. You could have had it. 15 minutes. Yeah, probably all the way up here. You could have had it, and that would have been completely fine. Having 1 to 8, which is really good. But yeah. Altogether, it was. This week has been a bit strange lately. We do have, well, not strange. Actually, it's been pretty clean. But for me, it's been not as good because of like being impulsive, stuff like that, right? And I think I did take a TP. Yeah, I think I did take a TP up here. Yeah. So when the high got taken out here, I think I took one off, and then got stopped to break even. And then after that, when and this was stupid, by the way, but I don't know why I was thinking of doing it. But first of all, we never. This target is the weekly high. That's previous week high, and that would have been fine. So the Tuesday, tapping into a daily fair value gap. Yeah, all of that just paired with each other. I should not have been looking for shorts, because after this move higher, I was feeling frustrated, stuff like that, and I was trying to predict the what's the word I'm looking for? The high of the trend, right? It's like catching a falling knife, right? It's just not going to work out well. So because of that, I did get stopped out. I thought that this was an order block because it did sweep liquidity, fair enough, but the bias just wasn't bullish, right? I should not have been looking for bearish entries or bearish prices when the confluence is stacking up to each other is that high, right? So this entry was just an idiotic move. I think I lost the profit that I gained when I took out one here, and more. So I think, yeah, so $30 or something like that. I lost $30 in total, and yeah, that. It was just a terrible trade, and it's not even like following my rules either, because this isn't in the equilibrium of that. That breaker isn't in a premium. It should not have been a trade that I should have taken, right? And that's just looking at price action alone, like on the lower time frame. So yeah, there wasn't any confirmation, like a market structure shift. All there was literally this order block, this breaker, the fair value gap, no higher time frame bias. It was basically just a gamble, to be fair, but I am glad that at the start, when I didn't get taken out by the micro Nasdaq, that I knew it was bullish, right? And only then, when I got taken out here, got stopped at break even there, did I look at bearish prices. And I know that would, like, either way it sounds bad, right? But it's good to know that it's not my theory that needs work, and it's just my emotion or psychology, right? And that's something that I know I need to work on, but yeah, I'm just glad that it's not the theory that I'm having gaps in. So that is the end of the weekly outlook. I hope you guys enjoyed. I hope you guys actually gained some information off of this. Monday I didn't trade, so I'm not gonna go through Monday. I'm not gonna go through Thursday. So yeah, hope you guys have a good and careful week trading next week. I'll see you on, let's see the news. Let's take a look at the news. What do we have next week? Another one. Okay, doesn't matter. But we have no news Monday, so I'll probably see you guys on a Tuesday. Alright,